Hello everyone, welcome to another chapter of Unit of Technical Analysis, and this time we are going to cover WD Gann trading techniques, Equinox and Solstice. We have seen previous two chapters, and in these two chapters we have specifically covered cycles which are there starting from 2016 to 2020-21. This was the first that we had covered, and in the previous one more webinar we have covered cycles which are starting from almost 2003 onwards till 2009. So 2008 and 2009, this has been covered. So we have considered in the last webinar one entire bear cycle, a bull cycle, one entire bear cycle, and almost halfway through the bull cycle. So we'll start again from there. So probably in the first webinar of Equinox and Solstice, we have covered from 2015 onwards to 2021. Last webinar that we had yesterday, that was from 2003 onwards till 2009. So the cycles were been completed. That was almost 1, 2, 3, 4, 5, 6, 7 years. And before this, it was 1, 2, 3, 4, 5, 6, 7 years. So nothing specific about 7 as such, but yes, trying to divide those cycles together. So we'll start here from 2010 onwards till 2014, so that we complete this entire period of last 20 years approximately, starting from 2003 onwards till 2021-22, like whatever is there currently till now. So let's start with January 2010, right? For the dates which are there, for Equinox Solstice, I'll request if we can go through the previous webinars so that you'll be able to understand things clearly. I've considered two charts. One is the regular monthly chart that we have of the entire bull and bear cycle, and second is our regular daily chart, right? So we'll start with the daily one. Probably we have come down till this part, and we need to start from here. Right. So February 4th February 2010 was again a low. We see that there was a high which was been formed, and after that, after the price action, it has again come down drastically. So this is a low. We'll mark that as a low. So 2010 February has been low. Next comes 21st March. 21st March again is not a high, not a low. It is coming midway. Yes, we can adjust it to the nearest part which is there possibly. Let's see how it looks like doing that. So this was low, and we marked down a red line. Not a red line exactly, but a blue line. I'm doing this specifically because one of the subscribers requested, okay, if you can just mark in front of us so that things should be easier for us. So that's why we're doing that. And these candles are like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 within a period of 14 days. So considering that, I'll mark the same on this to be as I, and also color that in green, which I've been using throughout. Right. So we go to the next one, which is 6th of May. So this is an adjustment one, and we come to 6th of May. So 6th of May again has been low, but yes, midway between that, we don't see any specific high lows or something like that on that part. Even if I consider this to be a cycle, so this was on low side. This was nothing like a 50% retracement or something like that. So not much to be considered. If this was especially this one, maybe we would have considered that. Let me try to reverse or see. Right. So this was again maybe 50%. So in terms of the range that we got, yes, this is a critical point. So I'll just try to mark it. So we can again say that this was a station, right? For the guys who are new, just to update you, generally a range has been formed, and these dates which have been coming, those are been coming at some specific levels. So this may not be giving us direction, but this would be stating us that okay, fine, we are somewhere around midway, mostly at midway, because till now we have been seeing that this has been coming either at the low, at the high, or maybe at midway location. This is again a midway location, so we can say that okay, fine, we got a resistance from here, it came down, took a support at the lower level, and from here again it started moving up, right? So that's why, as per our understanding and the assumptions that we had, that this may be probably some specific points. So here it is a midway point which has been coming, and midway is like 0.5 level specific, to be technical, but we are not considering that as a high or a low. Next point is 22nd of June. So this 22nd of June. 22nd of June again has been coming to the same level. So this is like again coming down to that one level. And this was critical. Why? Because this has crossed the previous high level and come down. Right? So at this stage, this has been considered as high. We'll go to the next date, which is 8th of August. I'll reverse this Fibonacci so that we're able to get some clarity further. Any specific points which are there. Right? So crossed from level 1 and probably gone up. This was somewhere nearer to 1.272 in terms of level. Not exactly, but yes, probably a high from the previous one. So we are considering this as a high. We'll go to the next point, which is 23rd of September. This was August. This is 23rd of September. Again, a midway, not a high, not a low, anything specific, not there. And let me just try to extend this in terms of levels. 2.618 maybe probably 1272. And coordinates, I'll take it across to this, right? So if you consider this as a low, this is a high, reversal coming up to this level. And if we consider in another way, probably at this, right? So this was there, reversal was there, again coming to that part. So these are more of permutations and combinations, not necessary that would be coming down to. We can consider even this Fibonacci, and maybe this can be seen as a reversal, or even this can be seen as a reversal. Again coming down to 1.618 level. We have considered major low and major high, and from there we get the reversal, and again a different target. So even if you consider over here, yes, this is a critical point. This was a critical point. Right. So the low was there, then we got a high. This low was again at maybe 50%. Even if you consider this part, yes, this has been coming up, this has been going up. So we haven't considered this part anything specific critical. Right. And so there are different ways in which Fibonacci's can be drawn. Not necessary. We had last time taken this Fibonacci. So before this, Fibonacci, right? But ultimately we understand that, okay, this was a high which was been formed. So that is 8th of November. Sorry, We had been there on 23rd. So 23rd was nothing. After that, we got this date, which is 7th of November. So 7th of November was a high, which is there. And after that, we come down to the next date, which is 22nd of December. So 22nd of December, again, not really a low, not really a high, somewhere midway. So we haven't considered that. Right. So again, coming down to the average part, 1, 2, 3, 4, 4 highs, one low, one average, that is approximation part. So we come down to a figure of 5, right? So these are like 1, 2, 3, 4, 3 highs, one low, and one approx, where we have considered this. Right. So it comes down to a total of 5. Let's jump across to 2011. Right. I'll do one more thing. I'll just draw a small Fibonacci. So I know I have to just reverse that. I'll do that. Yes. Right. So we got a low, we got a high, we got a low, and from there we got a reversal, and we completed a target of 1.618. Right. So probably if I had come down to this point, probably we have considered that. But here again, making adjustments on this date, yes, we would have done that. But okay, fine, we can do that, I guess. From here, again, it was at 50% level. So that's why I had not considered that to be considering more of an adjustment. So this was the only reason. Right. Again, a station that we got. So more of every now and then we have been getting stations for the reversals, and these are critically at 50% level. So it may not be necessary that they should be giving us high or low, but these are giving us again a reversal points which are more of at the 50% level. That's why these points are critical, these dates are critical. It's February. February. So this has been February. February again, I've considered that as a low. Why? Because this is just nearby. Or I'll consider this as a adjusted low, just to be precise. So this would be green. This would be changing my purview from 7, 1. Okay. Or because this is more than 2 days. If it was 2 or 3 days, we would have considered this, but this is like 4th of February and this is 11th of February. So almost like a week. 5 trading days. I agree. So after this, next date is 3rd, 21st of March. Let's go to the Fibonacci, double top. All right, again coming down to 0.5 levels. So not a direction as such specifically, but maybe the 50% levels which are critical for us. So it came down, it started moving up. So again a low, right? Low, why? Because this is like almost been 45 days, right? That's why it's been considered as a low. If it was somewhere around midway, we wouldn't have considered that. But because it comes down to another low part, we have considered that. So low, next date is 6th of May. So after this comes to 6th of May. Let me. Yep, this is 6th of May. Again, this has been low because the low after this has been maybe after a longer time, more than a week. So we can consider this midway also, but so no specific relevance. So let's consider this to be neutral. 6th of May, right? So 6th of May to be nothing specific. We just copy, paste it. Like this 6 and needs to be a 7, right? So because we got a low after that, not a major significance as such, firstly. Next date has been 22nd of June. 22nd of June. This is 22nd of June. This was low. So we have considered this as a low, right? Excuse me. Even if you see, probably we would have got a double bottom at this part. So again, these double bottoms are critical. We need to consider those. And 2010. So 2010. Yes. So 2010 onwards, we started getting probably a bear cycle. Right, so that's why probably this was critical, and maybe our current cycle, which is there of July 2022, is coming much more similar to this cycle. So that's why I kept it separate. I thought I'll cover up till 2009 and 2010. Probably overall would be covered together. I'll tell you why. Because again, here we have been getting cup and handle. In our part also, we have been getting a cup and handle. We'll see that separately. But yes, more of the resemblance has been same. That's why I'm considering that. We have been getting a resemblance of two bear cycles. One is this bear cycle, which has come down to 0.5 level. No, sorry. And this one, the second one. And more of the time period which is there again, that has been coming to almost 12, 14 months. Let's not get into details because we are focusing here only on Equinox Solstice and trying to find out the dates if they are critical for us or not. Again, I'll come down or jump down to the daily chart, right? So we were there on May, and from May we can jump down to June. So June was again a low. We consider June as a low. We come down to the next date, which is 8th of August. 8th of August was again a low, or probably it can be called as an adjusted low. So I'll change that, this to yellow. Right. So this was more like a double bottom because from here the market did go up. That's why we are considering this as a low. And we'll consider 8th of August as an adjusted low. So 8th of August is an adjusted low. So that makes it 5 and this makes it 2. Right. So after August, we would be coming down to 23rd of September. Yes, 23rd of September again, double bottom. So this is a low. 7th of November. Yes, this has again given us, let's say, a reversal at 50%. So we'll consider this as a station. So I'll again try to repeat this. It's not necessary that this date would be giving us specific lows or high. It can be giving me a reversal low also, or it can be giving me a 50% of the range which has been formed at those specific levels, right? So that's why at points, these levels become critical. See, we need to understand what the market is trying to tell us. We are not only trying to find out highs or lows, right? It can be a higher, lower high also. So this is a lower high, and this comes again to 0.5 level. So probably that's why that is important for us, because these patterns have been repeating again and again and again. Right? It's not that we have seen that only once, but during this entire cycle, maybe of 20 years, we have seen them repeating every now and then. So that's why that becomes critical for us. We have considered that as a high. All right, this point is high, and next point comes to 22nd of December. We'll go to 22nd of December. 22nd of December falls within 2 days per view. So that's why it has been a low, and we mark it as a low, right? So we have got 1, 2, 3, 4, 5 days of accurate dates and 2 dates of approximate dates. So that makes it 7, right? This has again been a bear cycle. And what we have seen during the previous bear cycle is our ratio, which is there, comes to almost 5. This bear cycle has been 5. This bear cycle has been 7. Again, this bear cycle has been 7. So the probability of bear cycle giving us approx date is more than 50, or you can say more than 60%. This is what we have been observed from last 1, 2, 3, 4, 5 bear cycles together, right? We'll go to the next date, which is of 2012. So I marked the red one with the bear cycle. Let me see if this was the low. Yes, somewhere around November 2021 was a low. Oh, I'm sorry. This is not 2021. It is 2011. That is, sorry. So this is not 2021. It is 2011. Right. Let's go to the next date, which is of 2012. 2012. Again, we see a rise of the bull cycle here onwards. Let me go to the daily chart. This is just to summarize. I mean, like, see how the bigger cycle has been acting. Now, after that, how the smaller cycles have been acting. Smaller cycle is like the daily. So this was my low. And from here, the next date, which is 4th of February. 4th of February is not a date. So next date has been considered. That is 6th. Again, it is midway. So nothing has been considered. Nil. We go to the next date, 21st of March. 21st of March is again a high. All right, we get a high. So this has been marked as a high. All right, we'll again mark the same thing as high. And I'll make this 2. Whoa, 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 all huge, all huge. So we come to the next date, which is 6th of May. So 6th of May is here. Sorry, what is this? February has been done, 21st of March has been done, so we are there on. Okay, I am sorry, I got confused. I'm really sorry. So this was 21st of February. This was the high, and probably this date has been considered over here. Okay, high is probably we shouldn't be considering that. I'm really sorry. I really did this. So this has been 1, 2, 3, 4, 5, 6, 7, 8, and 9, 10. More than 10 days. So probably let's try to neglect that. Let's not try to just cover up with a high or something like that. Excuse me. So where are we? I'm just trying to identify the date. Yes. We come in 2012 and we are now on 6th of May. So this was 21st of March, no specific date. This has been, but again, saying in terms of date which is there, yes, this has been coming to the same repetition of 50% level, right? So probably the assumption that we did well to do with that these are coming nearer to the 50% levels of the reversals or maybe the pullbacks. On the bottom side, from the top side, these have been happening, right? So we have considered nil over there, but yes, critically from those dates, it is important. Probably we'll try to make a different table for that. Solstice, 22nd June, 22nd of June is again, no, I guess there's some confusion happening with me. Really sorry for that. This is May. Yes, 6th of May. 6th of May is again nil. Nothing has been considered. Just that it has come down to 1.272 level. It was low after that. And this has been a major low, so that's why that was been considered. So we'll adjust this date over here, right? Now see, there are two things. If I adjust this date probably by 10 days, we'll be able to get 1, 2, 3, 4, 5, 6, 7, 8, 9. So probably let's take an advantage of that by adjusting this date. Probably we are getting this date also, right? And this is a high and this is a low. And that's why we are considering that. No specific reason apart from that. Let's see if we have any relevance between the cycle on the bigger cycles, 2012, February 2012, February 2012. Yes, probably we got a bigger range over here, right? We got a low, we got a high, and then from there, a bigger reversal. So that's why probably this February and then May, February and May. Let's try to see this on the bigger chart also, February, and this is May. So yes, this was a big one that we saw. A similar trend of reversal was also been seen, but that was from 0.5 to 0.236 on the previous chart. Show that. Yes, this one was there from 0.5 to 0.2. This was a bigger one. Probably this was a big reversal which came into picture. right? So if we try to make those adjustments, yes, probably do it those pretty. So let me take this as a high. Let me take this. Okay, the low is already been considered. So I can move this. Right. So two dates adjustments that we have to make. One is for this end of February, is to be considered as a high. Excuse me. See, there are some certain permutations and combinations which has to be worked out. We're able to do that, nothing like it. But try to see the effect also, because it was like a similar days going forward, similar days going forward. So that's why that adjustment has been done. And probably when you mark down, let's see, you are at this location. And when you know that, okay, this has been happening, so I'll probably mark two days, one this, and second one this. And by doing this, what I get is 1, 2, 3, 4, 5, 6, 7, 8, 9. So probably again a date which does make sense for us, because it happens that this cycle has been pushed by some days, and this over here has been repeated, this over here has been repeated. So if I'm at this location and I know that fine, this has been happening, so what I'll do is I'll mark this date also, and probably I'll mark this date also. And here we are getting a cognizance where this date was also been repeated and this date was also been repeated. And the same cycle of delay of 10 days, which happened over here. So this date, probably I'll mark this, and I'll also mark this date. So probably this gave me some kind of reference that this is coming down. It will come down. So again, this is a probability, but yes, a higher probability that we are getting. These are again higher probability trades that we are trying to generate from our side. Okay, so let me make this change. 22nd. No, that is 4th of February. 4th of February, change has been made. And we come down to now this date of 6th of May. Again, adjustment of low. B. Okay. So we have got two highs, one adjusted one, which makes it 3. Right. So we move ahead from this date. And as I told you, the relevance of these two dates are, right, it probably of the entire range, it moved down to 0.23 level. That was the first part, which was again a resistance for the previous one, that the previous cycle 0.236, and from there it created a cycle which is a range and a reversal up to 0.236. Let me draw Fibonacci also. Right. So bang on target, price action, double confirmation, and going further. Right. So that's how we try to adapt to the situations together. Right. From here, it started moving up. We got the next date. Probably again we see and adjusted this. I get a high over here. Right. If we try to calculate in terms of number of days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So within a purview, again, we can say that, okay, fine, this is an adjusted date that I'm getting. After this, we get a reversal, which is probably again a low. So 22nd of June is again an adjusted date of adjusted high. This is adjusted high. So I need to have this adjusted high going over there. And 22nd of June is again an adjusted high. So it makes it 3, 1, 2, 3. 3 dates, and this is a single date, so that makes it 4 at this stage. Let's try to find out further cycles. We go to the next date, which is 8th of August. So where is my so from 22nd of June, after making an adjustment, we go to the next date, which is 8th of August. 8th of August against 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Again, 9 days after that, we got a high. So again, we'll consider the same part as an adjusted high. Right? So 8th of August was again an adjusted high, and my figure goes up to 4 and 5. So whatever is now that, we'll make the changes at the end. Let's go to the next day, 23rd of September. And 23rd of, this is 23rd of September, again adjusting to the dates. 1, 2, 3, 4, 5, 6, 7, 8. And this was probably coming on the next date, so it makes it 9. So again, we got a probable high date. Right, so again, a probability high day that we are getting. And I come down to my next date, that is 7th of November. 7th of November was again more of like a double top. This probably will not consider, or just because that was a high and after that it started moving down. So this has to be considered as a high. If it was not coming down majorly, it was only for 2-3 days, I wouldn't have considered that. But because it made a high, okay, let's be neutral rather. Let's not go into giving any kind of adjustments to any of them. Right? So we have 1, 2, we have to go to the last date also, right? That is 22nd of December. So this is 22nd of December. Not a high, not a low. This can be considered as a major low, but yes, not making any specific relevance to any of the things, or not making adjustments. Here again, we would have made an adjustment, but because this was at a high part and this is at a low part, like 1, 2, 3, 4, 5, 6, 7, 8. So this adjustment would have been made, but this was a high, this was a low, so it becomes contradictory. Again, over here, we got our major high over here. So making that adjustment again doesn't make any sense. You see, it is like a considerable number of days. So this can be considered as a low. Let's consider that as a low. Why? Because this has been low, this has been low, and after that we have been getting a higher low. And again, the cycle is of 45 days to get a high. So benefit of doubt goes over here. This has been marked as red. This should be as adjusted to. This to come to the next point. Yes, this way. So what we have is 1, 2, 3, 4, 5. 5 days of adjusted low, and this becomes as 0. Right? So we come to the next cycle, which is of 2013. Again, let's go to the bigger cycle and find out. Yes. So here it crossed the previous high, and probably we again got a resistance somewhere around at this level. This was previously resistance. This has now turned into support, right? Just to understand the cycles which are there. And this was again in November 2012. So yes, we go to 2013 now. Right, so this is 2013. first date, which is 4th of February. Again, if we go for an adjusted one, 2 or 3 days before, we get a high, right? And this high was pricing for 2013. No? Yes, this was again a high compared to the previous one. This is high because after that it did come down drastically. Let's take cognizance over here, right? So we see a major cycle coming down. So 2013 will mark as, what is 2013? Yes, as a high. So this is a accurate high. This is not an accurate high. There are some adjustments. So we'll go to the adjustment high, right? Probably plus minus, we'll do it at the end of the calendar year. Let's go to the next date. The next date has been 22nd of March. Yes, let me draw a small Fibonacci, giving us more relevant dates. Yep, perfect, to the point. Made a high, made a low, give me a reversal at this locations, and again coming down, right? So it's not necessary that, okay, fine, this would be a top which would be crossed, something like that. It gives us confirmation in various ways, but for in terms of Fibonacci, we get a high, a low, a reversal. Again, this reversal was much more nearer to that. If you see in that way, yes, this is more of a double top also. So different kind of confirmations are there which we can take and go further on trading, right? So this was a high, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's more than 10 days, so let's not consider this as a low just for the sake of understanding. But if we consider 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, again, I'm getting some kind of relevance. So let's try to adjust that, because we are here looking for high probability trades with the adjustments. So here we are getting the adjustment, and that's why we considered that. Right? Shift of cycle, shift of cycle, shift of cycle. So we got a low. 21st of March is to be adjusted low. Adjusted low. And next date after that is 6th of May. 6th of May goes to adjusted high. So this is my adjusted high, and this is my 6th of May. I go over there, make an adjusted high. Second date is 22nd of June. 22nd of June has been bang on a low, right? Because after that we again got a huge high. So that's why this has been considered as a high, as a low, beg your pardon. So again, a natural low, which is an accurate low, not a natural low. Next day is 8th of August. 8th of August. 8th of August. So 8th of August is nothing specific, and in terms of days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, more than 10 days. So let's try to neglect that. If it would have been nearby, probably we would have considered that, but more than 10 days is like 14 days goes through a lunar cycle. So this is a start, this is an end. So it becomes contradictory. That's why we have just tried to remove that contradiction. So after 8th of August, we have 23rd September. 23rd of September is a high because it was coming to previous high, and after that almost like 23rd cannot be considered. make it neutral because it doesn't give me any kind of advantage apart from low to high, high to low. Nothing else just specifically because it is midway between the high and the low. So neither to consider as a high nor a low. We'll keep it as it is and leave it out. So if you see, if I make an adjustment for maybe 2 days, it is an high. If I make an adjustment for 2 days, it is a high. Right? But because these are midway cycles, let's not give any kind of discretion advantage to any of the dates. Skip this date. This date again has been skipped, 8th of August. 23rd of September is again nil. I'll consider this to be control. Nil. Right, this is nil. Again, this is nil. Right, 2 days adjustment makes me a high to high. But 2 days adjustment also makes me a low to the low. Probably these are like similar cycles which are there. But again, just to avoid any kind of confusion, we are not creating any confusion also. Let's go to the next date, which is 23rd of December, or maybe you can say 22nd of December. We have not again considered that. So it is again midway, not a major part. Let's see, 22nd of December 2013 has been 23rd of December. Has been any major part? No, absolutely not. Nothing, anything specific. So we are trying to avoid any kind of anomaly over here. Let's go to summarization. So we have 1, 2, 3, 1 date. And with adjustments, we have 3 more dates. So it goes 3 over here, and that makes it a total of 4. Right? With that, we come down to our last year, 2014. Why last year is because 2015 onwards, we have already considered in the previous webinars. I'll provide a link for that also for the newcomers or new joinees who are there. So 2014. Yes, 2014 started with a low. 1 low, 2 low, 3 low, 4 low, 5 low, a high over here. So till November, it is like almost 1, 2, 3, 4, 5, and a low. So 1, 2, 3, 4, 5, and then a high. And next 2 dates were like not on a high, not on a low, but like yes, again, if we go for an adjusted one, if it was midway, I would have considered, but this was a high, this was again coming back. So not really a high or a low. That's why that has not been considered. Right? So nil, nil, we have 1, 2, 3, 4, 5, 6 dates, and together it makes to 6. So our probability somewhere around overall together has been 57. Previously it was 64. So that makes a good sense, which is anything which is more than 50, probably it gives us high probability trades. And we need to go by that, but more of in terms of adjustments, if we go with that, and plus if we go with Fibonacci, probably it gives us a high probability trade. This is what we have seen altogether. And this is what we are trying to summarize from this parts, right? So overall, for a period of starting from 2003 onwards till 2021, that is almost around 19 years, we'll approximately consider this 20 years. What we have seen is, if we consider the approx dates of Equinox Solstice together with the 4 middays, which makes it total of 8 days. And if we look for the probability of having adjusted dates, considering adjustments which we have seen. Adjustment is like 4 days, 5 days, or maybe a weekdays where we have been getting the cyclic trades. Then the probability is much more than 50%. It goes to 57%, right? Which is a good amount and a considerable probability. Plus, together, if we see that with Fibonacci, probably we are able to get or maybe trade in a better way. This is what we would like to conclude from this part. Okay, guys, thank you so much. If you have any kind of doubts, please do get back to us. We are present on YouTube. On YouTube. Our channel's name is Unit of Technical Analysis, and over there you'll be finding various playlists. Especially for Gann playlist, we have the Gann trading techniques, which is there. And if you see over there, you'll be finding probably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And Equinox, we had probably the 11th and 12th one, which is there. This was the previous two considered, which we had considered for a cycle from 2015 to 2021, and again previously it was 2003 to 2009, and then we have been comparing the entire part. So we start overall to summarize it from 2003 to 2021. 2003 has been considered. Why? Because there was a very simple reason for that. This was again a bear cycle, right? So just before that, we have considered half part of the bull cycle, right? Starting from almost this low. So we started from here. This was very part, 2003. So from here, this entire bull cycle was been covered. Then we have considered this bear cycle also. So we have to consider more of the bull and bear cycles together. So we have considered 1, 2, 3, 4, 5. 5 bear cycles where we find high probability trades also on the basis of what we have seen till now. Okay, thank you so much. See you.